The global markets have been on an uptrend in the past entire week. There's been positive moves in the global markets primarily on account of good manufacturing data from China and Europe. Also, the US and China trade talks are scheduled to be happening in October. So that's given a positive fillip to the global markets. US and Europe have been up by about 1.5%, and Asian markets have been up by about 3%. However, Indian markets have been on a downside primarily on account of a very bad Q1 GDP data, which has gone down to about 5%. This has been a significant low, a 6-year low that has happened in the Indian markets. Also, there has not been much of stimulus that has happened, which was expected out of the finance minister. That's not happened while they have signaled large long-term reforms, but there hasn't been any immediate stimulus that has happened in the Indian markets. The biggest whammy has been auto sales data. The auto sales has been down by about a double-digit figure. Some of the auto sales have been down by about 20+%. So that's been a first time after many of these years, and that's a significant whammy in the Indian markets that signals the weakness in the Indian economy. Overall, the market touched a high of about 11,042 odd levels during the week, and it touched a low of about 10,746 odd levels, while closing at about 10,847 odd levels. So it was down by about 0.92%. The PSU Bank merger that was announced by the FM had not been taken well by the markets, and Bank Nifty had been significantly correcting through the entire week. So PSU Bank and Realty Index was down by about 3%, while the indices that were up by was Pharma, which was up by about 2%, and metals were up by about 2.6%. In the coming week, we expect a consolidation to happen in the Indian markets, while the growth concerns are there, and the indices are also below critical crucial levels. However, the global markets being positive, the bottom looks a little limited. Overall, we would expect you or request you to trade with caution and be very stock specific. Focus on only fundamentally strong stocks in the coming week. In terms of our recommendation, we have SBI Insurance, SBI Life Insurance, with a target price of about 1,005 odd levels from the current levels, which signals an upside of about 21%, with a stop loss at about 720 odd levels. We have a significantly positive view on the insurance segment, and SBI is one of the leading players in the space. The Q1 FY20 results were quite good in terms of the gross written premium. It was up by about 41%, and in terms of net premium also it was up by 40%. So business has been growing 40% year on year. In terms of the promoter holding, SBI is pretty strong. It holds about 62.1%, and BNP also holds about 5.2%. So strong parentage, good product, a very strong persistency ratio of about 56.27%, and also the capital position is also pretty comfortable in terms of the business model. So in terms of the parentage, the growth trajectory, the reach, which is the SBI reach, is significantly high across its branches. So that's the reach is significant, and in terms of valuation, it is trading at about a P of about 61x compared to an industry P of about 66x. So valuation is also pretty reasonable. So that's our recommendation. Thank you.